Hello and welcome to another Smaulgld live stream. Today is the 12th of October 2019 and tonight's topic, the damn Fed theory and the silver market. Tonight we're going to go through our normal Saturday night silver with Smaulgld program, but we're going to start off recapping a new theory that I launched last night, and it's about comparing the Federal Reserve and the entire Federal Reserve system to a dam. So it's the damn Federal Reserve. And I think that probably resonates with people, maybe not for the analogy, but just using the word dam in front of the Federal Reserve. Now let me explain what we discussed last night. You can go back and take a look at it. But here's the idea. A lot of people have been talking about the collapse and the reset and all this is mathematical certainty and so on. And what I was talking about last night is a dam is a very unnatural event. And if the dam wasn't there, obviously, after the dam has been built, if you don't maintain it, eventually it's going to collapse and it's going to be a total disaster downstream. All that water is going to go rushing over. Entire ecosystems are going to collapse. They are, because there'd be ecosystems downriver that wouldn't otherwise exist but for the dam. So what the dam does, the dam, as Bernie would say, is it creates economic environments, entire ecosystems. You can get hydroelectric power from one of these dams. You can get irrigation, all types of industry around maintaining the dam and so on. So once the dam is built, one could look at it from a point of nature and say it's unsustainable. If you just leave it there, eventually the force of nature, the dam will eventually collapse. It's mathematically certain to collapse. There's no two ways about it. That dam is not going to make it 1,000 years, 500 years, might not even make 50 years if it's shoddily constructed. However, once the dam is built, it becomes a very valuable asset. It's man-made. There's no two ways about it. That there's no way there would be a big reservoir there. There's no way you would get electricity out of it. People probably couldn't live in that area if there wasn't enough water. In the old days, you had to find a river like the Nile, and the water would come, and the people figured out that it would flood at certain times of the year, so you didn't live right by the river, and you waited for the flood and the waters to recede. Then you ran down there and you planted your crops, and then you lived slightly away from the river. Well, this allows you to live pretty much right on the river if you've got all of your proper hydraulics in place so that you can control the river. But remember, you're trying to control Mother Nature. Now, here's the difference, and this is the analogy with the markets. People keep talking about how it's unsustainable and what the Fed is doing means collapse. Well, not really. They created this entire edifice. And therefore, all this stuff that they're doing now, the repo, the new bond buying, technical bond buying, are all designed to keep the artificial system that they've put in place working. So once you put up a dam, you have to work on it. You've already altered the course of nature. And as such, you can't just leave it there and ignore it. So the dam's got to be taken care of. Absolutely, Bernie. You can't just leave it alone. And that means look at the dam as a massive intervention on nature. It is. It's not how the water should be. It's not how the river would flow. None of it is natural. Now, you get nervous when you see people working on the dam because with a dam, there's always the potential for a crisis. The dam could blow. If the dam blows, if the dam goes down, then everyone down the damn river is going to go. That's right. There's going to be a big, big problem if that dam goes. And it will go. And it's mathematically certain at some point, unsustainable and so on, it will blow unless the dam is maintained. So when you see people working on the dam, you should get nervous. Why are they working on the dam? Why are they doing repo? Why are they doing QE? Now, but just getting alarmed about it, you should really be alarmed if they're not doing work on the dam. So, yes, the dam is a threat, but it also provides sustenance to the current ecosystem below the river. It's the same with the Fed. As much as you're against the Fed, as much as you wish it wasn't there, it is helping to, I'm not saying this is the way it should be, same with dams, but it does sustain the economy in a certain way. And I think that's what the people who are against the Fed don't understand or refuse to understand, or say you're an apologist for the Fed or you're a dollar shield. No. The system does provide for value. Now, you could say other systems would provide for better value, and you wouldn't have inflation, and fine. But the thing is, you cannot just take the dam down. You have to take the dam down. No, you can't just do that. So, while they have this system in place, what the Fed does is they put plugs in the dam. They maintain the dam, and it's very expensive. And just like a dam is very expensive to put up, it's just as expensive to maintain, but it's even more expensive not to maintain. If you just let the dam down, then the thing is going to crumble. So, I think I'm starting to realize, and I've kind of known this myself for a long time, but when people say unsustainable, it's only unsustainable as long as, or would only be unsustainable if people didn't want the dam anymore. Because no one really wants, even the most ardent anti-Fed wants just there to be a collapse. There's some people who think they want a collapse, but they really don't. And that's why no politician is going to say, yeah, let's just burn the whole thing down to the ground. We'd be better off. A lot of keyboard warriors say that, but they don't really mean that. They don't mean I'd rather starve and have my family die in the street as long as we get rid of the Fed. Or they would say, I'd protect myself because I have gold and silver. No, you wouldn't. If economies aren't working, if there's nothing to buy or sell, and all you've got is a few boxes of ammunition and some gold and silver, yeah, okay, you might be able to go hunting, and you might, but the idea that somehow you're going to get rich if there's a collapse, if everything just goes away because it's unsustainable, they won't let that happen. And that's the other thing. They say, well, what are you talking about? If they just keep printing money, we're going to have inflation. Well, thought that one through. Here's what happens. When they print all the money, when they printed the money, like in China, to bring demand forward. All right. Well, now, essentially, you should be having deflation because they're just making a bunch of stuff. But by printing the money, they actually balance out the deflation with inflation, and they boost asset prices. And if you think about, that's why we've had price inflation. But the most of the price inflation we've had the past 10, 20, 30 years has not been because of monetary policy. It's not been in free market stuff. It's been in government subsidized, government regulated industries like healthcare, higher education, things that are subject to intervention by the government. But there's a lot of cheap food out there. There's a lot of cheap clothes out there that haven't risen in price. Now, housing has risen, but again, housing is a government intervention because of interest rate policy. So I guess you could say there, monetary policy. But it's not just monetary policy. You've got all kinds of rules on loans. You have government guarantees of loans. For housing, you have government guarantees of loans. For education. So that's where I think your real inflation comes from, not from this debasement of the system and all this borrowing, because I think the two offset each other, and that's why you don't have that. And that's why most people, and someone in the comment section today was saying, when are people going to rise up and demand a new system? Most people either don't understand the system, but I think almost everyone understands that you don't just take the dam down and everything is going to be fine once the dam comes down. There has to be a transition period. But here's the thing. Where's all that water going to go? What's the transition? Where's all that money going to go? Where's all that debt going to go? So they keep plugging the dam. They keep printing the money. And that's why this thing, I think, can go on for a very long time. And that's also why they're managing to keep the lid on asset prices like gold and silver. But even gold and silver will rise along with other asset prices. Silver is amazing that it's actually gone nowhere in 10 years, and pretty much every other asset, including gold, have had a nice increase in price. I think it's probably only a matter of time until silver also gets some type of just a monetary bid. And I mean that just because if all assets are rising because they're printing the money, then silver, of course, should get a bid. All right, let's get into our regular part of Saturday Night Silver with Smaulgld. Go through some of the charts. Very, very big month for silver at the Perth Mint in September. In fact, the biggest, we're going to start with that, the biggest month for silver since, I think it's January or February 2016, at the height of when silver was having a record period. The record period of silver was really from January 2015 to about March of 2016. There was some really, really big months. But let's take a look at the silver. There we go. Here are the Perth Mint silver sales. And they are, 1.35 million ounces in September 2019. And that's the most since it looks like, let me see what I got here. It's probably March. Yeah, March of 2016, 1.756 million. And then you had 1.75 million in October of 2015. And then, of course, you had the very, very big month, 3.53 million in September 2015. If you recall, or maybe you won't, I'll tell you what happened. That was when the Silver Eagles, Canadian Silver Maple Leafs were all having record years, Austrian Silver Philharmonics, and the U.S. Mint ran out of silver blanks, so did the Canadian Mint, and the Perth Mint was one of the suppliers, and they were well stocked. So they launched the Australian Silver Kangaroo as a bullion coin to be minted in amounts necessary to meet investor demand, and they had a big month, 3.5 million. And you can see that's somewhat of a dividing line between making the Perth Mint into a pretty big powerhouse in silver sales. Before that, they never used to sell 1 million ounces a year. And then they pretty much sold 1 million ounces every month after 2015 September, all the way for about 9 months. And you can see ever since then, they've had many 1 million ounce months. And as I mentioned, September was the largest since back in March of 2016. So big month at the Perth Mint. Not so big at the United States. It looks like, let's just take a look. I mean, clearly the U.S. Mint still sells more Silver Eagles than the Perth Mint sells total ounces of silver, but they're gaining on them. So far this year, the U.S. Mint has sold 13.29 million American Silver Eagles, plus another 500,000 in October that I don't have on this chart. But that's going to be a very low year. It might be last year's number, which was only 15,750,000, I think. But you can see the Perth Mint coming up strong. 7.789 million ounces sold so far this year. And since February, 6.9 million, almost 7 million ounces. And the U.S. Mint's only sold 9.2 million ounces. Now, one thing that's interesting is the way the U.S. Mint operates, it sells through what's called authorized purchasers, about 12 of them, and they're mostly wholesalers. One of them is Apmex, and the way they work the authorized purchasers, they pretty much make them buy so they know how much to get their minting out of the way. They start in December the prior year, and the authorized purchasers load up in January. Now, they may also load up in February if they don't if they sell through their inventory. But so in January, there's generally a pretty big 4, 5, 6, up to 7 million are sold, and then it fades from there. Although in 2015 and 16, it didn't really fade. It stayed elevated in the 4 million range. But you can see here, this year, started out, it's pretty low, 4 million. It's usually 5, 6, or 7 million in January. Went down to 2 million in February, and then it's been about a million, other than in March and May, about a million a month. Not bad. It looks like October is at a 500,000 right now, so they'll probably do another million. And then I guess November they do another million. Probably sell what they sold last year. But Perth Mint clearly becoming a bit of a silver powerhouse. It was always a pretty big gold seller. Not as big as the U.S. Mint and not as big as the Canadian Mint or what once the South African Mint used to be the largest, and then the U.S. Mint overtook it. But the Perth Mint becoming a pretty big silver seller. Let's get into the silver market. Let's move over to India. Now, India is a big silver importer, big silver exporter too, because a lot of the silver in India, some of it goes to industry, some of it goes to investment silver, although not so much. Some of it does go for domestic jewelry, domestic silverware, and then India exports silver because they have a lot of craftsmen in India, or craftswomen, I don't know what you call jewelers, who make jewelry, and so they load up on the silver. They have a decent silver mining, but nowhere near the amount that they need to bring in. And there was a bit of a drop in August, but they had a very strong July and June, 1,000 tons. I mean, 500 tons is nothing to sneeze at in August, but it was a bit of a dip. Still up year over year. Last August was 325 tons. So I would imagine that September and October will be higher. Remember, the price, I think, hit. Let's take a look at the price. I think the price was at its peak this year. No, it almost seems like distant memory when the price was 1950. When was that? That was in September. That was early September. But you can see the price was rising in August, so maybe that put a damper on it because the price was $16 at the beginning of August, and by the end of August it was $17.50. So that could have slowed things down, and maybe we'll see a September might be a lower month too, because September the price went from $17.50 to $19.50. So we'll have to see how India reacts to prices. I don't think they're as sensitive on price with silver as they are with gold. They did buy record amounts though in 2015, or import record amounts of silver in 2015 when the price plummeted to its multi-year low. At that point, it got, I think, into the $12.81, $13 range. Let's go back to India. And those are the monthly totals. Let's look at the annual totals. And you can see this year is going to be, it's going to be better than 2017. This is only through August. They're at 5,333 tons. Probably be in the top 3, I would imagine, at this pace. Even if they only do 500 for September, October, November, December, which would be moderate, that's another 2,000 tons. That takes you up to 7,000. There's only been three years where they've done over 7,000 tons. And again, that's only adding in 500 tons for a month for the next 4 months that are not currently reflected on this chart, because this chart only goes to August. So India is a major source of silver, physical silver demand. Now, I mentioned this, we don't normally look at the exports, but there are decent exports for Indian silver. You really don't see it as much in gold, although they do make gold jewelry and they do export it. But the reason I like this chart is it shows from Nick Laird at Gold Charts for Us is when the net import exports are higher, that means that there is a greater investment demand. In 2015, we know, according to the Silver Institute and Refinitiv, is that was 1 year where Indians actually bought silver for investment, not just for silverware and for jewelry, but actually were buying bars. And you could see they imported a lot, and you could see the net exports. The exports, those during that time period, were relatively low. And they're relatively low now, too, which means that And I'm sure they're exporting some silver, maybe some silver, some mostly silver jewelry. But you can see the net import exports are relatively high, and it means they're holding on to more of the silver that they import, and they're exporting a lower percentage of that. Now, of course, India doesn't like that. That messes up their balance of trade, especially with the gold, because they import up to 8 to 18% of their total imports are gold, and I'm sure silver accounts for a small single-digit percentage as well, because they import prodigious amounts of silver. All right, let's see what else we have tonight on Saturday Night Silver with Smaulgld. We like to let's look at the COMEX first, and then we're going to get into all the stockpiles of silver like we like to do. We'll get the commitment of traders out of the way. Open interest is down a little bit recently. A little more open short interest than there is long. I would say it's pretty nondescript trading going on. I don't really get anything from looking at this chart. Sometimes when you see long periods of time when the price is falling, you'll start to see the shorts go long, and the longs go short, and vice versa when you have these long periods of the price going down. Now, we've had a long period of the price going up basically since June and July, and it just went straight up, and you see the reverse happening, but not so much. What you're seeing is, instead of the shorts going, instead of seeing the longs going shorts and the shorts going long, we're just seeing an increase in the positions of the shorts and somewhat of an increase in the position of the long. So they're not moving in the other direction. So if you look at, and it's hard to explain without also looking at the chart, if you can go over to July of last year, we had a period of time where the price of silver fell from like July to October, November. And during that time period, the shorts became long and the longs became short, as reflected by the blue and the red. And you can see that little period where the blues actually are on top of the line, the reds are below, and that's when we heard all the pumpers, game over, never happened before, JP Morgan, a bunch of whatever nonsense stories, and that meant silver set to skyrocket. But I think what's interesting now is we've had the long price increase, but we haven't seen the flipping of the positions where the traditionally shorts go long and the longs go short. That hasn't happened. It just seems in the open interest is relatively high, but still, it's not like gold right now. Gold has very high open interest, record open interest. Silver seems to be, I would say, from this, directionless right now. But that's COMEX. Where it's not directionless is on the physical side. Now, we saw India, even though it slowed down in August, still has got a very strong year of physical silver imports. But let's look at the silver ETFs. They're still pulling in silver, and they're now at record amounts again. A little pullback a couple of weeks ago. But the ETFs now have about 700 million ounces. The SLV has 375 million ounces. I mean, these are big numbers, and they're on the increase. Investors are investing in physical silver in the form of ETFs. Now, it is strange. I don't have the chart tonight, but I did see earlier in the week they were talking about, well, it was gold. That's why I don't have it, because I searched my stuff for silver, but I'll fill you in. It was the World Gold Council was talking about how gold ETF demand is on record pace in the United States, in North America, in Europe. And it's we'll talk about it tomorrow on Solid Gold Sunday with Smaulgld. And it was showing the massive amounts of presumed tonnage of gold that Westerners are buying through ETFs. And the gold numbers at the U.S. Mint are atrocious. I mean, they're minuscule. And yet the gold numbers are very lofty at the ETFs. But then they showed, Asian ETFs for gold. They were almost non-existent. So clearly when Asians invest in gold, they buy gold. When Westerners invest in gold, they buy ETFs, paper products, and so on. Here is, and it's the same thing with silver. It's the U.S. Mint sales of 12-13 million are really, I mean, I would say at best they're respectable, but the gold sales at the U.S. Mint are just, they might as well close up shop. They're very, very almost non-existent. But the U.S. Mint sales compared to the SLV and the other ETFs, silver ETFs, are almost non-existent as well. So there's definitely a trend in the West towards purchasing paper products, and then the COMEX too. Look how much silver is now in the COMEX warehouses. Now the reason it's in there is because investors put it in there, not just to store, but because they want to trade it from there. And so you can see the stockpiles of silver are up to 314 million ounces just at the COMEX stockpiles alone. And those stockpiles are consisting of, I got this one right here, you've got Brinks, you've got Scotia Makata, HSBC, Delaware, Depository Corporation, Coins and Things, JP Morgan Chase. And, you know, you've got two that have 50 million ounces each. That's Coins and Things and Brinks. This isn't all the silver that's in the Brinks vault or all the silver that's in the Coins and Things vault. You can send the Brinks vault silver eagles. You can send them silver bars, Canadian bars. This is silver added up only in the eligible form to trade. So this is the 1,000-ounce 999 bars. So there's more silver at Brinks and in Delaware Depository and C&T and so on. But it's just not. This is just showing the eligible depository trading stocks in those bars, those 1,000-ounce bars. And JP Morgan has its vault of 150, I think it's about 155 million ounces of silver. That's the red line there. Well, let's take a look at an even more fulsome picture of what's going on. These are the silver totals put together by Nick. COMEX is at the top. Registered is down, but that's just moving. That means nothing. The total amount of silver in the COMEX warehouses has really not moved much in the last 4 weeks. That's fine. But what has moved and has been moving are the ETFs. You can see iShares is at, looks like it's at 384 now. It's at 375. That's up to another 2.25% since 4 weeks ago. Bullion Vault, Gold Money, Sprott, Central Fund of Canada, Deutsche Bank ETF, all up. And then over the last 4 weeks, just another 1% increase in silver held in these types of custodial arrangements. There's over 1 billion ounces. So when they say there isn't a large stockpile of silver anywhere, you know, there is, at least according to what these entities say they have. And here it is. You can see this is the most amount of silver held in these types of custodial arrangements pretty much ever, because ETFs didn't start until around 2006. But you can see they've gone up. They're much higher than they were in 2011 when they were about 800 million ounces. This is like 1.145 billion ounces, and it's not the most dollar value that's ever been stocked away and insured and vaulted and so on, but it is the most in ounces. That's over a year's worth of silver mining production, which is about 850 million ounces. And do we have anything else? Well, let's just do the price and we'll get to your comments. As I mentioned at the start when we were talking about the damn Federal Reserve, silver is down. 10 years over 10 years are basically flat. Go back to 2009 and 10, the price of silver is about $16, $17. That's where it is now. I can't think of an asset that's the same price. I mean, housing, everything has gone up since 2009, 10. The stock market, gold, everything. So there's your 10-year silver price, palladium, platinum, nickel, everything. Your gold silver ratio, unsustainable. Well, there you go. It hit its peak around 93 earlier this year. It's still 84. It's a far cry from that nonsense of the natural ratio of 16-1. We're not going to get into that one tonight. But, all right, well, let's get into what you guys may be into tonight, and we'll see what you guys are saying. Hope you've appreciated the charts. And let's see what y'all are saying in the comments. I'm going to put up the fundraising page and know how much you guys love sending Smaulgld and supporting the channel. We're up to $114 a month now on Patreon. But October, not doing very well. I was making noises about slowing this down and not doing it, and people responded in September, and then October's not been very good. I think we still only have 5 subscribe stars, and got nothing new there. I think the latest one came in September. Anyway, not here to complain. Just telling you what's going on, and of course, you want to help Smaulgld out, you can send Bitcoin or Litecoin through the QR codes on the screen. People have been very generous in physical delivery of gemstones and physical silver and cash and checks and things like that to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. The mug sales have slowed too. So anyway, below this BitChute, below this YouTube, are all of your options to support Smaulgld. You can also buy gold and silver through the affiliate links. You can send a one-time payment through PayPal. And, of course, you become a Smaulgld patron or subscribe star mug club member. Let's see what we have. Tricky Guy is here. He's here first. He was here complaining that I started 30 seconds late. He said, you waste my time. I no hang around. All right. Andrew is here. Fiona is here. All right. What do we have? A lot of chats here. No questions so far. Christian Borgstam must be from Spheria. He says, hello, do you have an opinion about gold money? Without giving financial advice. I think gold money is fine. I haven't heard anyone complain about it. Gold money is a place where you can send them money and they will presumably store an equivalent amount of gold for you. You can sell it, from the gold money platform, or you can ask to get it. Now, Peter Schiff did a very good video on why it's not a good place to buy gold if you're expecting to take delivery. He went through and then he joined the company, and I think he deleted the video. But I think he was right. Gold money is good for storing your gold. You don't have to take delivery. It's physically allotted to you. So supposedly if there's some type of defaulted gold money, it's not their asset, it's yours. You'll eventually get your gold. And so it is a convenient way of storing it outside the banking system. And it's not the best way, it's not the cheapest way to buy gold and have it sent to you. You want to buy gold and have it sent to you, go to BGSC, SD Bullion, AppMex, Money Metals Exchange, Golden Eagle Coin, Provident Metal, whatever. You go to those and they'll send you, or you go to your local coin shop. Max Strong, do you think commodities are undervalued? Coffee, corn, sugar, I'm not familiar with that industry. I haven't been following the prices of the non-metals. They go up and they go down all the time. So I don't know. I mean, people follow that stuff. Copper, I look at copper, nickel, I look at palladium, platinum, rhodium, but I don't track coffee, corn, sugar. A lot of that is weather related too, and it could have something to do with geopolitics. Pablo Pina, gold money the same as glint? Not really. They're all different. They all have their own little. And Perth Mint came out today with a product where it's supposedly, I don't know, it's on the blockchain or something. But Perth Mint, you got to be careful because some of their products are guaranteed and have insurance. Others aren't. There's like a pooled account. They have certificates that are guaranteed. Pooled account is not allocated, so you got to watch it with that. All right, well, that's about it for tonight. Make sure you join us tomorrow night for Solid Gold Sunday with Smaulgld. Have a good night.